They're back at it again with another back test, but this time the futures market is in play with the micro E-mini S&P 500. Um, I used to trade the Forex, but my last video was even a Forex pair that I was trading. But I learned that the Forex is a lot more volume to move the market. So I was basically back testing the micro E-mini S&P. Um, if for a smaller account, you definitely want to start with the micro um, versus the real, I would say, index instead of MES, which is the micro, and instead of the MNQ, it'll be ES and NQ. They all move in increments of, I ain't gonna say all, but 25. The ES moves in 25. Basically, I'm gonna say per tick because tick is one equivalent to one tick. But 25, so another 25 would be 50, another would be 75, four. So you need four of these to make one tick. But with the ES, not the micro, not the one I'm on right now, the ES moves 12.50, basically $12.50 per tick. So every time it goes from 25 to 50, one, moving one up, that's already, doubling your money. NQ, same, but this one's $5 per tick. This is gold currency. It just moves in increments of 10, so it needs 10 of these to move per tick. Um, but you're basically making $10 per tick on this. The micro, the one I like to use is $1.25 per tick. So you multiply that by your stop loss and you take profit for risk to reward, which is something I'm going to show. And then you have the NASDAQ, which is 50 cents per tick. But this is per contract. You can, get two, three, four contracts, and you just do the math. Something that I'll show later on. But this is my top-down analysis. You just go to the daily time frame to see the bigger picture, to see whether you're in an uptrend or a downtrend, or if it's just accumulating. It's 4 hours to view target opportunities. The 1 hour time frame to refine your supply and demand zones, to find your POI, your point of interest. You scale down to the 15-minute or the 30-minute time frame for entry. Just wait for SPE, basically a change of character, fair value gap order block to enter off of price rejection. So if you follow your rules, your basic rules in the market, um, and you learn risk management, you definitely can go far and become a profitable trader. Um, so this is the daily time frame. We're gonna go in the charts. Um, and if you see higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, and so on and so forth, we're currently in an uptrend. But people will look at this and say, well, you know what, for the time being, it broke structure to the downside. It basically took out a swing low. But the real low here is, I would say, is this one right here. So in order for this to, remain bearish, it would have to break this low to disrespect that one, but it didn't. And I'm gonna show you why. Um, I can delete that. Basically, you see nothing but breaks of structure to the upside. BOS, BOS, and a small displacement above this high, but it's still a break of structure. And people will see this and be like, okay, you know what, this is temporary opportunity to take it to the downside, but I wouldn't recommend that because what happened was it fell right into play with a beautiful daily order block, which you can refine on a lower time frame, which is something I would do. Um, so you see, once the the S&P 500 came up here, it was overbought, so it started to fall off, but it fell perfectly into a daily order block. I can even zoom in. Now, one thing I love about the daily candles is you can mark out the previous day high. Let's see. right here, and the previous day low, which is basically is beautiful. It's sitting right above this order block. So this was January 10th. You go over the weekend and Monday, first thing it opened up, came down, took out the liquidity from this previous day low, and it shot up. So basically, you can scale in on a lower time frame right here, which is something I'm gonna do. Let's go to the 4 hour, refresh it. So this zone down here, this big zone, is just the daily time frame order block. But you can refine your entries. You can refine the zones, and I'm gonna do that. Just fix this up to show y'all the bigger picture. We are in an uptrend. Right here, yes, it did take out this low, but it didn't really, I would say, have a huge displacement under this low. Basically, what I mean is it didn't come down strong to break through this low. So what it did was it just took out liquidity, came up right here, probably just hit some hidden demand zone, came up to form equal lows. They don't have to be perfect, but this is just liquidity sitting in the market, and the banks and institutions like to come and take out these sell stop orders and to take price even further. So we can refine this daily order block. I'm going to show y'all why I'm doing this. You can even come over here, zoom in. There's a beautiful indecision candle, basically just showing sideways movement, sideways market at this time on November 5th of last year, this previous year. So that's just a beautiful, valid order block. And why do I say valid? Because you can find order blocks everywhere on the charts, but this, before that leg up, it took out a form of liquidity, and then it shot up and broke structure. So when you see that, that's a valid order block. I can show the difference and teach the difference later on what an invalid one would look like. But going on, it even broke minor structure, internal structure right here to the upside, and it broke external swing points. So you know this is definitely a valid with all this volume coming up. There's a lot of imbalance in this market right here, right here. So you can see, yeah, currently in the uptrend, currently uptrend. Now we're consolidating. Now, one thing I love about consolidation, it just basically the RIMC method, the range, initiation, mitigation, continuation. It's similar to accumulation, manipulation, distribution, but this is RIMC. This is just a range, sideways market. Basically, this is where all the volume is. So when it comes back to this level in the near future, we'll see what happens from there. But it came up, I can delete this for now, to fill this imbalance in the market after sweeping this low. It just came up to, I would say, a breaker block right there. What's a breaker block? Oh, put that back. What's a breaker block? A breaker block is basically a form of demand zone, uh, or you can call it order block, whatever you like. But right here, where price was bouncing off of it, it was getting weaker and weaker. I already knew it was going to break through it just by looking at this. You see this volume coming up, okay, came down and retrace. You see this small push up, came back to retrace. You see this, came back, and you see this small push up, yeah, it was going to break through. So this is really a beautiful breaker block. But what happens when it came back to it? Rejection. And I always want to wait majority of the time before I take a trade for liquidity to be swept and taken. And there you go. The price came up, swept this high. Basically, buyers that think if this high gets broken, that the price is going to go up. So they'll put their stop loss above this point. So buyers stepped in right there, probably put their stop loss right here and got taken out instantly, shortly after. Um, But instead of doing that, instead of doing what a lot of retail traders would decide to do, you can just enter right here, put a stop loss, you can put it above this high, because it's a protected high now. And you can target, an old previous low. Or you can just target right here for what? That's on a higher time frame. This is crazy. This is a 9-to-1 restore ratio, 800 ticks. And what I say about ticks, right here, the micro ES, it's $1.25 per tick. So let's do the math. That's 804 ticks. 804 times $1.25. That's $1,000 play right there in less than a day, um, alone, for just for one contract. Imagine if you got two, but you gotta also think about your risk. How much are you risking? Risk management. So that's 88 pips. I like to say pips from the Forex. 88 times 125. So you're basically risking $100. If you had two contracts, you'd be risking 220 instead of 110. But on a lower time frame, I like to use a smaller stop loss with at least like 50 pips. Matter of fact, I probably, let's see, yeah, good 50 pips. Instead of what was it, 88, you can do 50 pips. Multiply that by the contract size. So you're risking $62, which is a beautiful trade for a 16-to-1 risk to reward ratio. That was basically just a beautiful sniper entry right there. But you come down, don't mind these red lines. This one I can take that one off for now. You see right here, when it did come down, it broke structure. Internal structure, not external. So I broke this one, came up to fill this my GAN box, I believe it is, to fill this imbalance in the market. So when you see that rejection like that, you could even get in for this play. Short position, see it rejecting, beautiful. You don't have to keep that big of a stop loss. You can keep it right at that high. Get 65 ticks. On a lower time frame, you can even scale in and get a smaller one. But I was very confident that, and this is not just cherry picking. I saw this uh, in the past, when it first happened, and I'm like, you know what, it's going to come down and hit this zone, and it did. 887 pips, 887. Multiply that by your contract size and how much per tick. That's $1,100 off this play, and that's why I like to use higher time frames instead of like the 5 minute or the 1 minute. It reduces a lot of noise in the market, and you can see what the market wants to do a lot clearer than being scaled in on the 5 minute or the 1 minute. But right here is where I wanted to get to. Remember, this line I had marked the previous day low, and I marked the previous day high, which is up here somewhere. I might have deleted it. No, actually, it might be this. But anyways, when it came down and I refined that order block from the daily to the 4 hour order block, which is to me a valid order block. It's not to me, but to a lot of other professionals would consider this a valid order block. So you can see the rejection that it had. Now we're going to scale down to the 1 hour. Just zooming in on price, basically. Um, so we come down here, we sweep this daily low, we come up, we break minor structure to the upside. I'll say internal structure. And then what happens? Price came down, always has to retrace. It's not going to just shoot up and not retrace. Came down to a beautiful breaker block, a bullish breaker block on top of inefficiency, which was a fair value gap, inside of a breaker block, which is basically a unicorn strategy. Um, Hard to come by, but definitely like when you see them, you know for a fact that it's going to play beautifully in your favor. You can even set a sell limit, I'm sorry, a buy limit at this level here, or you could have just got in after you see some momentum push in the market. So you can set a stop loss right here, scale back out to see where I'm a target. I would probably target some, you know, some liquidity. I would say definitely, and it hit beautifully for almost close to 11 to 1 restore ratio for over 800 ticks. Um, so that play right there, hand in hand, is just beautiful. Um, Once you see this, and learn it, you can basically make a lot of money and do a lot of good when it comes to, whether it's, if you want to work for yourself or if you're just tired of working and you just want a home job or anything like that. You always want to have a side hustle, like a side job for sure. And you just never want to quit your job to do this 100% unless you mastered it 1,000%. But I'm getting close to mastering it, and real soon I will be considered a professional in this market when it comes to, excuse me, the Forex market or the futures or whether that's stocks or indices or anything like that. Especially gold. That's something that I'm gonna trade later on in the future once I master um, this. But you see, like basically liquidity got taken out. These sell stop orders that are below this swing low. Sellers had got in right here. Um, Basically, there's sell stop orders got triggered, saying basically get me in the market. They probably put their stop loss above here somewhere, and they think the market's going to go down just because it swept these lows, or broke those lows. But really, it was just a liquidity sweep. And once I saw this on the higher time frame, um, basically this candle, each one of these candles represents a 4 hour. Um, so right here, you can see, let me take this off. You can see that price try to bring it down to close below these levels, but bulls said nope, came back up and closed up high. But all it did was it just came into order block, fair value gap to balance out the market. And what happened again? Right here it opened, made a small high, came low. The sellers tried to bring price down even further for a second attempt, but bulls said nope. And once I saw that, I'm like, man, this is going to skyrocket. Um, but right now, we see a huge imbalance in this market. The market's closed today, Martin Luther King Day. But right here is where I'm expecting price to come to, and definitely fall. Oh wait, I guess they're open now. Okay, that's awesome. I guess they were closed for the time being, but we're in a live market right now, which is amazing. Because I definitely planned on playing this to the downside because we have to fill this huge imbalance, and most of the time it fills it 100%. I ain't gonna say most of the time. Sometimes it'll fill it 100%. Most of the time it'll reject, right here or off the 50% threshold of that imbalance. But right now I'm waiting for price to break 60. I would say 4675. Let me add an alert. Oh, we're doing maintenance. That's great. But one, I'm gonna keep an eye on it today, because I saw this price rejection right here, where sellers try to bring price even further down, and seller stepped or buyer stepped in and said nope. So once I see this low get taken out, I know for a fact that MES will come down to fill this fair value gap and see what it does from there. But we are currently still in a downtrend. This is the high that price would have to take out to consider this an uptrend. Let me see if I can find the tool that I see these professionals using. Um, it's funny because I can't find it right now. Here it is. Perfect. And let me see if I can use it. Yep. All right. Now, once price breaks this high right here, I want to see it do this. Zoom this over. Matter of fact, let me take this off. Bring that path back. The price can come down here. This is what I expect price to do. Fill this fair value gap, come up, you know, create maybe higher highs, higher lows, maybe reject out that level again, and then when it breaks out of it, I want to see old resistance becomes new support and go from there. Oh, No, let me hit that undo, and there we go. So basically, I just wanted to break old highs. Basically, the external high that it has to break um, to take this market into bullish territory. And then I wanted to see it come down and test these levels and to see if we can use it as support again and go from there. But if you want to learn, you can follow my free Discord. Um, but I do have free courses, and most of them are free. But when it gets down to learning more, kind of like with the Hakanashi candles, um, getting deeper and deeper into this when it comes to learning more and more every day, 24/7 throughout the week. I will teach more about that later on. You can just follow my Discord. It'll be in my on my YouTube channel, and we'll see what MES does today. But I see that it's going to come down to fill that higher imbalance and efficiency that it did previously over here. When it came up, it came down to fill this imbalance. Came up, came down, fell beautifully into a daily order block. And go back to the daily, we can see that we are in an uptrend in the bigger picture. But like I said, um, once this high gets taken out, then yes, it'll be back in bullish territory. But for now, this high needs to be taken. Um, but I see price even coming down to a daily fair value gap right here. The higher the time frame, the stronger these zones will be. So let's go back down to the smaller time frame. So right here is a beautiful, what was that, a 4 hour order block? Maybe it was maybe a daily order block. So I could definitely see price rejecting the zone, especially after taking liquidity. I'm gonna show right here. Basically, just swept liquidity. Buyers basically probably try to step in right here and get instantly rejected from sellers. A lot of people will put their buy stops above that point. Say, okay, if the price gets there and it breaks that high, I want to get in. But what happens? A lot of people get trapped. That's what happens. So they're definitely going to take a sell position shortly after it breaks this low and go from there. And I'll keep you guys updated.